Hi friends, welcome to Activity Education. Today we'll learn about auditing, which is a part of Ipcc Group 2. Firstly, auditing is the only subject which distinguishes CA from other commerce professionals. Secondly, it is the subject which will integrate the knowledge acquired from all other subjects. Like while doing auditing, we'll use costing, law, accounts. So the first topic is today the nature of auditing. What is auditing? It can be explained by the definition. The definition of auditing. As per general guidelines on auditing issued by ICAI, it is defined as a systematic and independent examination of data, statements, records and operations and performance of an enterprise. Here there are the three words which will make you understand this definition. Systematic. It means proper process should be followed. Independent examination. Independent opinion is not dependent upon the wishes and the directions of any other person. Enterprise. It can be a company, sole trading, banking company, insurance company and so on. Let us take an example to understand the concept of auditing. For example, if your mom give you a list of items to bring from any shop and she'll give you the money, then if you'll not have time, you'll ask any worker to bring all the items by giving the list and the cash. He went and brought the items which are in the list and the balance cash. Then after receiving that, you'll check the items by the quality and you'll check the invoices, etc. It means it is just an examination of things which are in front of you. Now, how audit is done and what, why, who will perform this auditing? For what purpose will perform auditing? It means it is a systematic and independent examination. Will perform auditing for a stated purpose. It means to know the financial statements of a company and to form an opinion upon the company. It is performed by an auditor and it is done by an auditor. It is done in such a way that he'll pursue tasks, collect evidences, evaluate evidence and communicate report. Here you can see in a short manner that what, why and who, how. By these four questions we can understand how audit is performed. Then next we will see what are the financial statements and uses of financial statements. Let us see what are the financial statements and the uses of financial statements. In a company we will have a lot of transactions. So all the transactions are entered into books of accounts. The summary of the books of accounts will be done into trial balance. But the only trial balance is not enough to form an opinion, so we need the financial statements. The financial statements includes balance sheet, profit and loss account, cash flow and fund flow statements. Now, balance sheet is a statement which tells the position of assets and liabilities as on a particular date. Profit and loss account shows that during the period, how the operations are conducted, what were the incomes and expenses and what was the result of the operation, whether it was profit or loss. The difference is balance sheet is done on a particular date and profit and loss account is for a period. Cash flow statements. It is not compulsory for all the companies to make cash flow statements as a part of the financial statements. But, however, all the listed companies have to make CFS and attach it to the financial statements. So, financial statements include balance sheet, profit and loss account and cash flow statements. But apart this, it also include notes to accounts and annexures also. Notes to accounts will mention all significant policies followed by the company. Annexures. Annexure is a page where you'll get the whole details of assets and liabilities. Like if we'll take an example of fixed assets, from the starting like opening balance, depreciations and all, and at last we'll get the closing balance. Now we'll see about uses of financial statements. First one is the owners and the shareholders. Why these owners and shareholders are in use of financial statements means because they are giving money to the company and they will be willing to know whether their money is properly utilized or not. So they are interested in seeing the financial statements. The next is management. Management is also interested in knowing whether our venture is profitable or not, and it is profitable. If it is profitable, then how we'll make an further investment in other sectors, or if it is not profitable, then how we should shut down the premises. These financial statements will make the management for decision making purposes. Third is lenders or creditors. These persons are giving credit to us, so they may be interested in knowing the creditworthiness of the company, like whether they should give credit or not, and whether their money is safe or not. The next is investors. If I am an investor, I want to invest my money. I want to know which company is profitable, which company will be able to give me the returns. So I want to invest in which company my money will be safe and the returns will be more. For that purpose, I should have the financial statements of a company. The next is bankers. If you want to open an account in any bank, the bank will require the 3 years audited financial statement, mentioned as audited financial statements. And government. The government want to calculate tax, or if you are applying for any subsidy, government also need the audited financial statements. And the next is employee. If you are the employee of the company, you might be interested in knowing whether your company is running into profits or losses. If it is acquiring a lot of profits, then you will ask about the return, how much you are getting and all. Next is credit rating agency. In India, there is a credit rating agency called CRISIL. It can be understood by the following example. If you want to do your CA, but you don't have a lot of money, so you will estimate a certain amount for taking the best coaching for your course. So you will go to a bank and ask for an education loan. But it is not that easy that the bank will give you the loan. They will ask whether you will be repay the loan or not. So they'll ask you the income tax return of your guardian, and that is the way they will appraise whether you will be able to repay the loan or not. In such a manner, similarly, when a company has to go for taking a loan from a bank, they will give a rating. What CRISIL does is, they will see the financial statements of a company, they will evaluate it and calculate some ratios and analysis, and so on. They will give a rating for a company. If the company is rated as A+, then they'll get the best loan. Next is financial analyst. He is the person who will compare the performance of your company with other company in the same industry. For comparing such, he is also in need of financial statements. These are the users of financial statements: owners, shareholders, management, lenders or creditors, investors, bankers, government, employees, credit rating agencies, financial analysts. All these users also require a person who should check whether the financial statements are properly made and they are disclosing the material items, adequate disclosures are made or not. Such person is called as an auditor. They want a person who should say whether financial statements are reliable or not. So the auditor will tell us the financial statements which we are relying upon are right one. Who is an auditor? A person who is a chartered accountant as per CA Act 1949 can audit a company. It is the qualification of an auditor. Now we will see the qualities of an auditor. First quality is integrity. It means the auditor should be honest and he should be brave enough to ask the questions to the client. Next is objectivity. The objective of the auditor should be clear and he should work for achievement of that objective. He should not be biased in making any judgment. Independence. It means the auditor wishes should not subordinate with the wishes or the directions of any other person. Auditor should work independently. These three qualities are the most important qualities, and these qualities of an auditor is a topic which is in the standard 200. Next is professional judgment. The judgment should be professional. It means only a person with relevant experience and training can give a judgment. He should give the judgment in such a way that any other layman cannot give. Professional skepticism. Skepticism means auditor should have a questioning mind and he should be alert to the conditions indicating doubts. Update his knowledge. Auditor should update his knowledge as soon as. Example, nowadays Companies Act 2013 So many changes are there in that, and even in tax also we are having a lot of changes. So he should update his knowledge before entering into the practice. Adequate practical experience. Auditor should be a person who is having an adequate practical experience. It means after completing of the Ipcc, the person should work in the articles. Then we will get a practical experience to perform. These are the qualities of an auditor. In the next class, we'll continue these topics. Thanks for watching and subscribe to Activity.in. Thank you.